All right, Bismillah. Let's get started, man. Today is February 5th, 2024 at 10:09 p.m. Eastern Standard Time. Obviously the day is over. Kind of like left this. This is very pretty to me, actually. Just midnight open. Just talking in terms of liquidity. So each one is highlighted, and of course I extended certain kill zones, certain areas longer than necessary, but that's just my style. So you're gonna say this is Asian high, top of this box, low of this box, Asia low, London high, London low, New York AM session high, New York AM session low. This is the lunch hour. I'm starting at 12 and ending at 1. And this is the New York PM session, high and low. And again, Asia session has started. Yeah, and why is it? And this down here is literally the same as that. It's just I don't usually keep these colors on the chart, but in terms of seeing it like this, all colorful in different colors, different zones, different colors, we can see that just as a visual representation is that this Asia session ran this PM session low, right? This London session ran this Asia session low. This New York AM session ran this London session high. Couldn't go above the Asia session high. So meaning that it literally traded, this London session literally traded in the Asia session range. Then this session, AM session, broke again the London session high. Dropped down, took out the London and the Asia session lows. Continued lower, took out the previous day lunch session lows, and traded within the range of the AM session, previous day AM session period, right? So even if you just wanted to kind of, prices in this range here, that is the current range, right? This low to this high, and then you see optimal trade entry below the 50%, and you can see this you can see this inverted fair value gap. Obviously that's off, but doesn't matter. All right, so obviously took a different approach today. Whatever, right? So you can see entry. This is a about to say what? All right. Anyway, this right here is a 4-hour fair value gap. It's a 4-hour fair value gap that we've been utilizing for quite some time now. Quite some time, right? It's like what, 1, 2, 3, 4, 5, the 6th day, and that doesn't include Sunday. Right? Sunday is right here. But anyway, 6 days. Or so. Or less, more or less, as they say, right? But yeah, so you see that price traded within this zone here. All right, so you say, okay, let's say that this never happened. This never happened yet, right? And you see all this going on. So technically price, when the market opened, it was within this range here, Asia session. let's see what we can get from that information. All right, let's take this out. So the larger range, it was the range that we just deleted. This range here, this low to this high. And the shorter range was, you could either choose like this range to this range, or again, we are in the tighter range. We are in the between the Asia session high and the Asia session low, right? Once the market opened. So let's see. All right, just to we use this high and this. No, yeah. Actually, end up using this low, but we're gonna adjust it to this low, right? Eyeballing it as usual. Think that's pretty much accurate. And what we see here is an entry. Maybe I should just use a box to highlight the optimal trade entry. And again, I eyeball that too, right? So let's turn that like a yellow or something. Black trimming, because let's just make it like yellow trimming. All right, so it's not half bad. That's using the Asia session because yes, all right, price is in the consolidation, but it is working within this tighter range. And there you go. Took out the high, optimal trade entry short. And so that's one setup, particularly in the AM session, right? So now that looks like it's like, all right, you got one standard deviation, 1.27, 1.5. Either way, it traded into the consequent encouragement of the 4-hour inverted fair value gap, or that 5-minute inverted fair value gap we dragged from back here that you can see here that price was reacting to. So next time it stabs down into it, you want to, you know, pretty much monitor it to see is price trading below it, you know, trading to it, through it, and holding below it or holding above it, that type of deal. Then you want to look for your setup. There's a lot of different ways to look for a setup just off this time frame alone. And that's just my usual pattern here. Again, we identified this entry just using the larger range as well. But I'm really I'm interested. Wanted to say I'm really concerned, but really interested in the opportunities even within this area here, right? So let's say you weren't around for this 9:30 open, right? This entry off this. So you have a run. I just feel like I'm jumping around, but really like excited. I'm gonna take this optimal trade entry using this range off. That's the point's been proven. And what I wanted to do. All right, so that what we just highlighted was this highlighted would be a buy side is rated, right? Buy side liquidity. And this is just to highlight a different entry than the ones that just pointed out. Okay, so there's a silver bullet trade between 7:30 and I'm sorry, 7 a.m. and 8:30. Let's see if we can trade that. Okay, that's 8:30. Actually, we have this line here opening on the 8:30 candle as well. So let's make that bigger so you can see. Oh, bright light, right? Anyway, you can see the 8:30 opening. All right, we can see it better now. And so the point is, this right here is an entry. So you can erase that. That's optimal trade entry where we highlight it. So here, this high, this London session high rated. You have a bearish fair value gap here that price traded into as a right. So, and it traded into consequent encroachment of that, and then showed us the unwillingness to continue higher. So let's take that back out, and you can see run on. This is the A plus setup, right? Run on a, in this case, short, right? Run on buy side here multiple times, right? Here's your break and market structure here. Once this low was ran through, then that became your market structure shift. And then you want to look for a retrace back into a fair value gap and some type of inefficiency, right? And here you have it right here. That is the A plus setup. Only problem is, can you be patient while it's formulating, right? So here we go. We have entry right there. That is the A plus setup. Here's your entry off this. So run on stops, swing high. You either say swing high, you can say this is external liquidity, but this, and if you look at the larger price range here, the Asia session, then this is external liquidity. So traded into external liquidity, and then it traded back into internal here, and then external again outside of this range, right? And if you think about it from this range, from this low to this high, right? Because this price traded in this range currently, you should see an entry. There you go. 70.6 short, back down into the London session lows. So how many? So right now we see that's actually two trades. So this is for me, this is a silver bullet trade, and just for conversation's sake, this is you have a breaker here, bearish breaker, and you have a order block right here. Let's see. Matter of fact, let's use this one. Okay. $49.73.5, and the high here. Let's use this again. 49.73.5, and the high of this one is 49.73.5. Yes. So anyway, my objective is not necessarily to bring up breakers and order blocks, but I think that's pretty pretty accurate in terms of the bodies of the candles and using the wicks, kind of like monitoring it in real time, reading price action, reading the tape as another variation to, I want to say variation, another alternative to reading the DOM on the level 2 data. So this is a complete trade. This is a complete trade. Silver bullet taken out. Then we have price taken out this previous session high and that same previous session low during one session, and we didn't even get to the 9:30 open for equities yet, but that's pretty good. 7 to 8:30. Let's see. See what that looks like in terms of, we got an entry. What's going on here? It's messy. Okay. Oh, even that's pretty tight. Apparently that was not drawn correctly. There you go for 1 point scratch for eyeballing. But anyway, where are we? Man, I kind of lost track of what I wanted to do. But anyway, that's the A+ trade setup, right? Run on buy side liquidity or buy stops, break followed by break of market structure, and a retrace into an inefficiency, in this case a inverted fair value gap, and targeting the previous session low. But obviously this is external liquidity, is not necessarily low-hanging fruit, because you have all these, this inefficiency, but price render with some degree of force on this 5-minute time frame. So took this swing low, those are targets. This inefficiency, this volume imbalance, target. This swing low here is a target. This right, maybe this go from here to there, that's internal range liquidity. Now once it breaks below that, this is external range liquidity, this fair value gap here. And maybe when it did this and then traded back up, right, maybe someone would have gotten a little nervous, that price may be turning back around. And for that very reason, you should, maybe if you didn't trust the price going lower, you would look to exit a substantial amount of your entry, your initial position. Right, and then once you see price break below this internal, technically external range liquidity, this inefficiency here, break below it here, this is a reason to add to the trade. Once it got below 50% and broke below, and again, then you would target this swing low, and if you had greater conviction, then you would aim for a PD array or a level below 50% of this range. Let's use this so we can all right, so that's not 50%, right? So we're gonna look for, so you target here, you can target all of this, but first target would be here below 50% of the range. All of this here, even though it may say it's balanced already, but I'll still be looking at this as a inverted fair value gap here. But anyway, we have a bullish fair value gap here. We're gonna watch and see what price does with that, and then you have this inverted fair value gap here, way down here, at a in this regard at a steep discount. All right, So don't need to play it bar by bar. Let's just get back to it. Bam. Bomb, right? So that's golden, right? Beautiful. And see price run up. Again, price ran sell side here. Price ran back up, ran this swing high. And so what is this, right? See, sell side rated, right? Because it was, right? So it's a different way of looking at price action. So this swing low was rated here. Have a break in market structure or a market structure shift once price broke above that. And what we want to do, we want to look for an inefficiency that's available that price can trade back into. So you have this inverted fair value gap. Doesn't look like that would be great, but you have this bullish one here. And you can see price stab down into it. He didn't trust this entry here. And you would get in here without explaining too much. You can technically get in like on this candle, kind of trust it on this candle. Well, you can trust it wherever you want. You can trust it from here, from the reversal, or you can trust it from here, and you can trust it on this bull bar here. Breaking market structure, retrace back into this fair value gap. That's your entry here, and your push higher, lunch hour. And you would say that again, targeting swing highs, these imbalances to this is above 50%, well above 50% of this range here. So you're in a premium again. So you want to be full size here, right? Price pull down. I do believe this is a 1 hour fair value gap, but it's not necessarily entertain that right now, but that would be the best bet, so to speak. Let's see. Oh, not even 1 hour. It's a 15-minute one. Is it? Nope. Where you get that from? Oh, it is. It is in 1 hour. It's just pulled back too far. From here to here. Pulled over. Anyway, I just wanted to discuss alternative trade setups, which we pretty much just covered. This 7 to 830 silver bullet, optimal trade entry using previous session highs or the current range that price is in. Price breaks this tighter range, then it goes into another range, which once it broke below here, this is your external range liquidity. Now you got to think in terms of premium and discount still. And yes, price could have continued to go lower, and such is life, right? Would have broke this range, right? So you're literally going from internal range liquidity. This is external to this range, but is internal to this range. So if it broke below here, now you went from, in regards to this range, from internal range liquidity to external range liquidity. So it's kind of like a scaffolding, cascading effect. But yeah, anyway, that's all I got. That's all I got. 24 minutes. it's fire to me. So 24 minutes of fire, right? Just mucking around a little, but yeah. Optimal trade entry here. So yeah, this was definitely a tradable day, and also we didn't even get into the dollar, the NQ, YM, none of that as well, and we didn't get into the 10 o'clock news, which would have been in this session, and that's actually the driver, or the whatever, right? Rather it's manipulated or not, that was one of the proofs for this this sell-off. 10 o'clock news, high impact at that. High impact ISM services PMI data, and this was taken not too long ago. I'm honestly not even concerned with the numbers. It's just more so, hey, what do we see in the charts at the time? And again, we see a complete setup, and even this was a setup because you have it trading below this fair value gap. So you have this breaking market structure, retrace into so we have again the same run on buy side, same breaking market structure, here as well, fair value gap, and get into here, took some heat, or into here, took some heat still, but not as much, or anywhere in between, right? 25, 50, 75, or the 100 mark. So you had an entry here, price gave you another opportunity to get in here. It looks like just shy of consequent encroachment, or maybe actually, yep, it is consequent encroachment of nope, eyeball king, right? So it is technically consequent encroachment of that range. Boom, right above that price. Candles held below it. So we had several trades just in the AM session alone, and then this is just outside of this here. But this is your entry here. Got an entry technically here. Retrace into this gap. That's another entry. And you got another fair value gap here. That's another entry. If you trust it, holding above this bullish breaker here. And yeah, so good money. When money talks, no one checks the grammar. Money talks. Money talks, right? Something's supposed to walk when money talks. You know? Quiet the mind, quiet the soul, quiet the spirit. You know? Do what's best for you. Let's get it. All right, thanks for listening. Gonna move forward. I'm really like an addict, right? Like a fiend. Let me see what the NQ is doing. All right, man. All right, NQ. Look at that. London session traded inside the Asia range. Different. See, so this broke the range. Yes. Broke below that range ever so slightly. Came up, broke the high. The NQ didn't do that. Anyway, we up to a 29-minute mark. I'm not gonna be too long-winded. So yeah, this right here, tight range, is inside the Asia range, which means that if it didn't have a catalyst, then you will look to enter and exit within this range. You know, top, high, low, whatever. Fair value gap short here, whatever. Still targeting previous session highs and lows. So here you have the Asia session high still intact, the Asia session low still intact. This comes in the AM session, runs the Asia session highs, Asia session highs, London session highs, traded into the previous day's PM session, and you have a bearish fair value gap here. And you have several entries, and technically price is there right now. And this is just a 5-minute chart. Right? Boom. External range liquidity into this bearish fair value gap. Here's your so you have run on buy side liquidity, have a break in market structure on this candle, break in market structure on this candle here, retrace into an imbalance, and we have that imbalance here. We also have a small one here. And we have a small one here, but whatever, right? This is an inverted one here, but could have got in here, took some heat. Your stop loss would have been here, above here, or if you were using this to get in, then it would be above here. So yeah. And what range is that? That would be this range to this range. That's where price would be currently. Either this swing low to this swing high. Let's see, we got a fine entry here. That's off already. Right? So it shows this high and this low, and we have in optimal trade entry here and here, 61.8 into this external range liquidity or this bearish fair value gap. Optimal trade entry almost caught the one standard deviation. And now I wanted like, oh, what about the entries, like tighter entries, tighter entry parameters, and yeah, you would have caught what you were looking for. So fine tune the lowest or the highest body and the lowest body here. Now you have almost 61.2, one standard deviation, and you see entry for the first one 70.5, entry for the second one 61.8, and pretty much the same routine where price stab down into this bullish fair value gap, and you can track that out and see that that's another entry long here. So now you see that this is these two are very significant in terms of price reacting to it. Now we can kind of like see in the future if price will react to them, or maybe we can probably see if price will trade between them. Right, that would be exciting, right? But anyway, today was an inside day, inside Friday's range. And then we can still see here price took it, right, traded back down into the previous days, which is Friday. I know we have Sunday price action somewhere around here, but anyway, Friday's previous days price action, and we look for an imbalance here, and we have this here. We have this one that we highlighted below 50% of the range. And where were we? Where are we? Right, so then you here have the lunch. You have this reversal here just before this session is over. Lunch hour took out a swing high from the AM session, and ultimately PM session took out the AM session highs. And we have an inverted fair value gap here. That price was reacting to several times prior to the move higher. So you can say you're reaching, but you can see clearly before this move higher, the price tapped down into it. Right? You have this, you have a same principle run on the sell side here with this candle. Have a swing high into a bearish fair value gap. You have this break and market structure and a pull down into this inefficiency. Here's your entry, either here or off of this inverted fair value gap. Right here on this high with this line is drawing across. Here's your entry targeting the lunch hour. This swing high, and ultimately these relative equal highs from the AM session. So yeah, that's exciting. Now you see that the Asia session is literally trading in the range of the New York PM session inside of this bearish fair value gap. But either way, inside of this one. That puts us at 36 minutes. Anyway, I'm done. I can keep going. I didn't even go to a higher time frame. I know we had that 1 hour high time frame level on the ES, but you know, very interesting. Very interesting. Very interesting indeed. Anyway, you guys be safe, stay dangerous. When money talks, no one checks the grammar, man. That's it.